Good morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Monday morning pre-market webcast. Okay, S&P 500, E-mini futures daily chart, and you can see this morning that we have gone ahead and made a new high, by a tick. So, here comes the double top crowd. But the reality is, during the course of Friday's trade, in the early morning, in the first hour, you saw the market falling back into some old habits. We've talked about the 2106, 2107 area for the last 6-7 weeks. It has been resistance for the last 6 or 7 weeks. The thing that I wanted to see was whether or not that area could, over the course of the regular session on Friday, become support. And we saw that. Here, let's look at a 15-minute chart. Here's a 15-minute chart. And here's Friday's trade. Here's your open. Here's 9:30. And where do you have your lows? At your 9:45 bar and your 10 a.m. bar, right at 2106. So in the regular session, 2106 stopped the sell from the open in its tracks. We went up. We broke above the 14 half high from Thursday. Retraced that back to 2109. It's been pretty steady. Then it got a little violent off of the Europe Open, back down as low as 2108 half, and steadily higher up to 2118 from there, tick over the all-time highs. So the takeaway for me is this: 2106 is a new floor. It's a floor until it's not, and we're trading 10 handles above it, and the bears are going to have to come down to it and break it, and then they're going to have to turn it back into resistance if they're going to want to make a move back to 2100 and points below. Otherwise, you're going to see 2106, if they push back and they test it and it holds again, you're going to see that be the floor or the base for potentially a move up into the Wednesday FOMC announcement, at 2 in the afternoon. So 2106 is going to be the area still that everything pivots around with respect to who potentially has control of the tape. So as of now, don't kid yourselves. The bulls have control of this tape, and they're getting back into the old habits of buying dips between 9:30 and 10:30 in the morning. If they get back into that, then you're going to see that grind higher throughout the day, and that's not the type of price action that you want to fight on a consistent basis, because you're going to get chewed up, or you're just going to get yourself into some multiple leg short disaster, and you don't want to do that. The indications that the bears would be taking control of the market again would be a series of lower highs. Make the bears show you that they've come to play. Otherwise, all that's happening is you're just getting a little bit of a pullback, and it's squeezing the next set of weak shorts to new highs. And that's not a game that you want to play. If you're not already long the 2106, we're long 2107.75, and we're also long from a couple of weeks ago down at 2069. But there's nothing that's happened that has been sufficient to tell me that I need to do anything with my long runner at 2107.75, except just hang on to it and see how much mileage I can get. But you've got to be looking in these areas when these key numbers come up and create lows, create morning lows and morning dip buys. You have to be looking to get long those. So 2106 is an area that I haven't shut up about for a couple of months, and it's proved to be important again. It will still be important this week. All right, everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website, Princetontrader.com. Come check out the chat room. Come trade with us this week. Live chart, audio, the scroll. See how these big levels fit into what we do and see if we're right for you. I'll be back tomorrow morning with another webcast. Trade them well, everybody.